Back to another week in review. We're going to be looking at the trading week of December 15th, 2025. This is the last full trading week of December, basically of the year, for me at least. This will be the last video I make this year. Going into next year, going to be basically keeping the same schedule, going to do these videos every week. I mostly do these for myself, to be honest. It's a way to consolidate all my notes, kind of talk things through, talk it out loud, and just kind of get my head around things. And I think the format so far has been decent. Hopefully it's been helpful for some people. I try really not to go into any week with a strong bias. Obviously, if you've been watching any of these videos this year, some of the weeks are easier than others as far as, how to identify rotations, how to identify potential biases. Obviously, the last few weeks, the last month or so have been grindy, choppy, range bound, very, very difficult to say, directionally, I have a strong case one way or the other. We have big whipsaw intraday moves like we had last week. But I think overall it's been a good year. I've done okay this year. Haven't blown up, so that's good. Still in the game, and going into next year, there's a few other things that I want to release, probably in written format, just because it's a little bit easier. Obviously, none of it will be for sale; it'll all be free. I would never charge anybody money for any of this stuff. It's nothing new. It's just going to consolidate, my general thoughts around auction theory, general thoughts around order flow, how I look at a day, how I structure a day, how I structure like a weekly, daily, intraday plan as days develop, using order flow, using auction market theory, and using statistics, because that's a huge part of how I trade. So 2026 will be a good year. It's going to be probably pretty crazy as far as the markets go, which is a good thing for us. Hopefully we get some volatility. Going into this week, this is contract roll week. So the current contract, Z contract or Z contract if you're American, expires this week. My charts don't roll until net settlement volume or net volume at settlement is higher, so that's usually Tuesday. So Monday, I always really find it easier to trade the current contract because obviously we have the Friday close, we have reference points on Friday, we have higher volume from Friday. We can use that as points of reference, and I'll talk about that as we get into the charts. And then Tuesday it rolls, and my charts look kind of weird because of that, but you get used to it. It's pretty easy once you've been doing it for a while, like I have. So, getting into data, we have a lot. We have a lot this week. Monday 8:30 Empire State Manufacturing Index, 9:30 to 11. We have Fed speakers. Tuesday we have NFP being released finally, I guess, at 8:30. Retail sales, unemployment rate as well, and 9:45 we have manufacturing and services PMI. Wednesday we have Waller at 8:15 a.m. Thursday, we have CPI and jobless claims at 8:30 a.m. And then Friday, we have 10 a.m. consumer sentiment and inflation expectations. And like I said, we have contract roll this week as well. So keep that in mind as the volume is going to start splitting basically on Monday. But Tuesday, it's going to be very noticeable, splitting more towards the new contract in front, which is March 2026 H contract. So getting that out of the way, last week was kind of preposterous, to be honest. It was wild. Wednesday to Friday, had you told me we were going to whipsaw and have like a broadening formation like this, with the earnings moves and trends in three different directions in 3 different days, it's very hard to foresee something like that happening. I'll keep my thoughts to myself about everybody online saying that they saw this coming and caught all this. We'll just keep it at that. Focus early. The monthly time frame, weekly time frame, daily time frame, they're all in balance. Friday's sell. Friday's trend day down actually took me by surprise. For sure, I did not expect a liquidation and new weekly lows on Friday. Everything I had was pointing towards a day with reversion, which we did get, but then it turned into a trend day when we couldn't get back into and bid weekly VWAP. So it took me for a surprise. I spent most of Friday red until the afternoons when the lows formed, and then I made it back and came back green a little bit on the day. But it was a tough day for me because I did not see that sell coming, especially with how the last days ahead of it traded intraday. So the big focus for me here, first and foremost, Monday is going to be Z contract for me, like I said. So we left a bearish imbalance. So we have a huge, obviously, trend day down. big liquidation V profile with a bearish imbalance, which fills and completes at around 67.80, 67.86, 67.85. It's down in this area here. So the big thing for me, focus early, is going to be looking at, first and foremost, last week's low. So this is the current weekly balance, current daily balance, lows down in here at 68.05. This is a huge pivot here going forward. And then we have Friday's settlement and the VPOC, as well as last week's value area low at 68.30s. So the big thing for me here is, first and foremost, we're going to open probably around this area here. If we start to lose the 68.30s levels, then I think the natural test of last week's low is going to be there at 68.05s. Whether or not that happens in Globex, whether or not that happens in regular trading, I'm not sure. But the big thing here is that we do have an imbalance down, so this could easily fill out. We also have the 20-day, 50-day simple moving averages here, as well as an unfilled regular trading hours gap. So we have a lot of reasons why we could visit this area down here. And if we lose last week's low, 68.05s, then the first stop will be right down here for me. We could see a low potentially form here as we clean this up. Could see sweeps. We could see some decent volume come in. If we start losing this range, then we talked about this a couple of weeks ago, but we have basically no structure until we get into the 67.50 to 67.20s range. So the big thing really here is that if we're trading around last week's low, if we're looking at this, immediate focus will be filling out down into 67.80. So I think we could potentially have a short trade down into here if we start offering last week's low. But it gets very, very slippery if we lose this regular trading hours gap and lose these two daily moving averages, as well as this weekly high. So below this, I think it's probably a pretty fast move down. We finally backfill this poor structure that we have right here. This has just been sitting for, since November 25th, basically. So there's really nothing here to stop this from doing a full traverse and getting us back down all the way down into 67.30s. This is also the middle of the current monthly balance range that we're in. So this will be a massive, massive test and a huge pivot if we're actually trading down here this week or potentially in future weeks. Any acceptance above, so if we're looking at the bottom of Friday's distribution and we're looking at where we closed down in the 68.30s area, bids above this, a natural test is going to be the afternoon rally spike high, which is 68.57s, and that's also last week's POC. So the big thing for me, again, will be if we're holding up here, we're putting up decent lows, and I'll be looking for those long trades to get us back up into 68.56s, last week's VWAP, last week's VPOC. If we're above 68.60s, then backfilling all of this is fairly easy. So if we're getting above this, I would not be looking for any short trades, and I'd be looking for the longs to backfill all the way back up into the range, into the top of this current weekly balance range that we're in. Obviously, if we're breaking out of this daily weekly balance range, it's longs only, cleans up all-time highs, probably goes to 72, 7,300 on age contract would be my guess. But the big thing really is going to be looking at how we're trading around Friday's lower distribution, how we're trading around Friday's settlement, Friday POC, and how we trade around Friday's low or the pullback spike high from the trend day. So again, above 68.60s, clear path back up into balance highs. Below 30s, we test lows, 68.05s, and then we could potentially clean up down into 86s, potentially put a low in here. That's what I'd be watching. If we puke this, sells only, all the way down to 50s to 30s. And this will be a massive, massive pivot on this market if we're back in here. So to give you some context around what that looks like on higher time frames, let's go into, my trend line. It's hilarious. It's right here. So this huge monthly balance range that we're in, we would be back testing into the middle of that balance range. That'll be very important if we test it. I don't necessarily know if we do. The thing about this week as well is that historically this is a bullish week. The week before Christmas nets about a 1.3% return. Let me check my notes. 1.3% return over the last 50 years sample. 73% of those years within 50-year distribution are in the variance of 1.2 to 1.5%. So seasonally, it's very bullish this week. Now, whether or not, obviously, past performance dictates what this week does, We'll have to find out. But as far as, where we're sitting, as far as, where we're potentially positioned, we're in a good spot to not rule out a rally into end of year still. So as much as this was whipsaw, as much as this was two-way trading, ES really went nowhere. The S&P really went nowhere. We're basically stuck in this range. We're still holding above, big moving averages, the 50 and the 20. We still are holding above, we're in the upper quadrant of current monthly balance that we're in. So I would not rule out, I would not be, super biased one way or the other than to note that as far as the progress that sellers have actually made it looks significant on a daily time frame, with what's happened intraday. But as far as what's actually happened, we're still holding all this inventory up here. So if we start getting below 80s, then all of this inventory here, that starts to puke. And that's why this move down into 70 20s, potentially 50 to 20, or potentially lower is quite possible on the table. I think it would be a fairly fast move below if we get there. So keep that in mind. NASDAQ is the exact same thing. So again, Friday's sell left a bearish imbalance that completes at 24,950s-ish. That's also a naked weekly POC. Now, NASDAQ is sitting at the middle of that current monthly balance range right here. So that's 25,170s-ish, we'll call it. So it's going to be the same plan for me looking at the bottom of Friday's distribution. If we're above 25,220s, then afternoon spike high should get tested at 25,370s. And then a back test of last week's value at 25,470s is definitely on the table. So again, if we're above 220s, I'll look for longs to 370s. To 470s to 500-ish. And again, anything above this spike can backfill this relatively quickly. And then basically above, back above November's close, we have this unfilled Globex gap up here, which could be a target, and that would be a full weekly value traverse if we're back inside last week's value. So again, I would be looking for longs, and then rebid 470s can easily come back up and fill this gap. Same plan generally. If we're losing last week's low, then looking for this to fill out is natural. So we'd be looking for below 25,120s, we'll call it. We'd be looking for that move back down to 24,970s. Good Lord, down into this area here. And then losing this would open up probably a liquidation down into 620s, all the way down into 600. There's nothing here. There's absolutely nothing below this. So all this poor structure would go very, very fast, and you shouldn't be trying to catch a knife down here until we clearly base. So that's going to be the plan. It's going to be tricky. It's going to be tricky with the roll, especially come Tuesday. I'm going to be moving over to H contract, which means that the settlement difference, I think, is close to 60 points. So it'll be somewhere up in here. But all of these levels are still valid. So the big thing with the roll is that, the current ranges that we're putting in on the Z contract are still very, very relevant. I don't back adjust my charts. Some people do. I prefer not to. But these levels will all be very important on both contracts. And immediately come Monday, I'll be using Z. So hopefully that helps. Hopefully these videos have helped this year. If they have, like the video. Subscribe to the channel if you haven't. I appreciate your time. Thanks very much. Have a good new year.